So this video is going to be talking about negotiating an owner finance transaction with a back-end buyer or a homeowner who's going to be living in the home. So don't forget to take a moment and go look at part 1 of this series about negotiating a contract with a seller. Now, when we are selling a home using creative finance to a homeowner, what is it we're really selling? We're selling an opportunity first and foremost to the home buyer. We're selling a reasonable down payment and we're selling a reasonable monthly payment. We're not necessarily selling a 3-bedroom, 2-bath, 2-car garage, 2,300 square foot home with a pool on a cul-de-sac in XYZ school district. If the borrower had the opportunity to get a loan from a mortgage company or a bank of their choosing, they would have that ability to do so. So keep those kind of things in mind. Next, also understand, because that is the situation, rarely are these transactions negotiated. Now, the caveat to that is subject to the marketplace. When you're in a rising or declining marketplace, all things change a little bit. Also, based upon who our buyer is and the size of their down payment may give us some thought in how to negotiate our deal a little bit differently. So once you understand those basics, set your terms on what you want to sell your house for. And when you set those terms for that sales price, it needs to be reasonable for the home, for its condition, for the marketplace, and the neighborhood that you're in. Oftentimes in the seller finance world, we can sell our homes for a premium. So if the appraised value is, let's say, $100,000, can we sell our home for $110,000? Absolutely. Why? Well, most of the time our borrowers are not going to have mortgage fees related to the transaction. They're not going to have points and all the various things that go along with that. Yes, there may be loan processing fees and things of that nature, but not necessarily loan origination fees. And they're paying for the privilege of being able to buy a home instead of just leasing one out there. Once you come up with that sales price, set a reasonable interest rate on a traditional amortizing basis, typically a 30-year note. What is my reasonable interest rate on that property? So you need to know what Dodd-Frank says, and not here to go through that in detail, but if you do not have an existing mortgage, we want to be 6.5% over the APOR, which is the average prime offer rate, and you can look that up online and get what the going rates are for the APOR every Tuesday. It's a government website that is published. If there is an existing mortgage on the property and we're doing a wraparound, we can be 8.5% over the APOR, and that will determine what our APR is, or the annual percentage rate. So you've got to run a calculation using your APOR, then you got to plug it into your APR and make certain you understand what that is and stay compliant with those items. Once you understand that, set your interest rate. Is my rate going to be 6%, 8%, 10%, something else? Know where you stand from a compliance perspective, but then run your numbers. What is my monthly principal and interest payment at X interest rate? But then, knowing that I have to collect escrow from my buyer, what are the taxes? What are the insurance? And guys, every state has different amounts and calculations for property taxes. Here in Texas, we have high property taxes because we don't have state income tax. Other states have low property taxes, and it makes a big difference in how you negotiate your transaction. Insurance. Get a good feel on what insurance is going to cost for your home. What does insurance cost for a $100,000 frame home versus a $100,000 brick home? A $200,000, a $300,000. If you don't know these things, contact your insurance agent and ask the basic questions and get some answers. What you want to look at is, what is my principal, interest, tax, and insurance payment, and how does that feel for my house, in the neighborhood where it's located, for the condition the house is in, and for the marketplace we're in. Are we in a rising marketplace or a declining marketplace? You have to get a good feel for all of these scenarios as you're structuring your transaction. One thing I learned a long time ago, guys, is if you overprice your house, if you overprice your monthly payment for your particular home, people will not look at it. They won't even respond to you about it. So be reasonable, because time is money in our industry out there. Determine if your loan is going to be fully amortizing. And for us as an investor selling to a consumer, an amortized loan is the smart and the best way to go. Always understand that one of the requirements of Dodd-Frank is to collect escrow. And I will tell you right now, it is the smartest thing to do to always collect at bare minimum taxes in your monthly payment. And I also like to collect the insurance payment as well. Next, make sure you talk to your buyer and put in your contract information about loan servicing. We always recommend and suggest that your loans be serviced by a loan servicing. Take a minute, guys, and visit us over at OFN Loan Servicing for your wraparound loan servicing needs. Always process your buyer. Even though you might be exempt from the SAFE Act, that is one of the requirements for that, it is so much better to make certain that your buyer can qualify for the loan, that they can have the ability to repay the loan. And also, if one of your back-end exit strategies is to sell your note that you're creating with your home buyer, having a processed loan will not only make your transaction easier and more saleable, it'll make it more profitable for you as well. Now, if you're in the Texas marketplace, please understand some of the new rules and regulations as well, such as the new wrap lending bill that is out there. We have recently made a video about this Senate Bill 43, as we call it, the new wrap lending bill, and you can find that on a link below. Make sure you discuss with your buyer any HOA dues that might be due and payable, and ensure you know who is going to pay for those resale cert fees and your transfer fees along the way. Now, once you've done all this, get your contract signed, get your disclosure signed, and get this deal into your closing agent for closing as soon as you can. So if you found this video helpful and you want to take the next step in your real estate investment career, take a minute and visit us over at the ownerfinancenetwork.com, where you're going to find a lot of free videos as well as other videos that will help you in your real estate investment career. So guys, if you like this video, take a minute to like it, please. And if you'd like to have more videos of this nature, take a moment and comment below on what you'd like to see, and we will do our best to do those for you. So thanks for listening, and we'll see you guys next time.